of exempt income. Can one person just confirm if you guys can see my slides?
Yes, sir.
All right, thank you. So yes, the learning outcomes, we will discuss the introduction. Oh, sorry, this is definitely wrong. The learning outcomes is wrong. I see I've just copied it from the special inclusion. So I'll send you the updated. But guys, that's the only thing that is wrong there. It's just the learning outcomes. So it's definitely special inclusions. So we will look at section 10. Now, guys, what have we looked at so far? We have looked at section 1, which is gross income definition and all of that. Then we've looked at section 9, which is special inclusions. And today we are looking at section 10 of the Income Tax Act of South Africa. And guys, I just need to highlight this again to say that, you know, in different parts of the world, even in the UK, in America, in Namibia, and in Australia and wherever, many people use that very same definition for gross income, where we say total amount in cash or other. It's just that there are sometimes differences, like the difference between Namibia and South Africa is we use source and they use residence base and things like that. And that is why we give you this background, so that you have a solid foundation. So what I'm trying to say is, for example, gross income, that is also section 1 in Namibia. Special inclusions is also section 9 here. But our exempt income in South Africa, it's section 10. For us, it's section 17. But I'm trying to say it's still exempt income. Maybe it falls under a different section or something like that. But it is still the same type of principles that will be discussed there. Now, guys, I just need to also highlight that some of you didn't even go through tutorial 3. That is why for question 4, remember you had to calculate that person's income. For question 4, people wrote long essays and paragraphs. I can tell you now, if I'm going to mark your paper, you will get 0, because you were supposed to calculate someone's gross income or special or income. I don't know what you were supposed to calculate, but what I needed you to do is have a column where you had description, then the rand amount, then the reasons and things like that. And where would you see that? When you actually did that tutorial that I've posted, tutorial 3 with the solution. If you went through that tutorial, then you would have get an idea of, oh, this is probably how we should calculate it. And even our slides, when we did special inclusions, you know, when we dealt with the exempt portion or the capital portion for annuities, y equals to A over B times C, you saw what need to be included in gross income, what will be exempted, and that will give me income. So you had no reason to give me long stories, and that is you not reading the required. The required said calculate someone, or calculate someone's income or gross income. It didn't say explain. Some of you, long stories. If this is you, and I can mention names, but I won't, because then you will now become suicidal, which I don't want you to do. Please, no test is worth your life. You just register the course again and come back like a pro, and the second time you pass it. So no test. Some of you were sending very disturbing emails saying, right now I want to cry, right now I feel like nothing, and things like that. Oh, guys, those things, I just read them. I just read them and I roll my eyes, because like I said, you guys must start. Guys, part of this journey is that sometimes you won't perform the way. Let me not say sometimes you will fail. Let me say sometimes you will not perform the way that you think you should. But that is not the end of the race. You pick yourself up. Be depressed for 2 or 1 hour. Cry if you need. If you're someone who like to show emotion, do that. But after 2 hours or after a day, pick yourself up, and then you try again. That is, you need to learn this very early in your life, that Failing does not define you as a person. When you fail a test, it doesn't mean you are a failure. It means you failed the test. You come back, and sometimes we come back stronger. One day I'll share with you a testimony, but it's very personal, so maybe I shouldn't do that now. Okay, but yes, failing is not the end of the world. Anyway, so exempt income section 10, and we say it should be amounts that were included in gross income, and now we will exempt it. So, but then it will be exempted again in terms of certain sections in the Income Tax Act. Now, guys, before I continue, tell me, how do we calculate income? Tell me, how do we calculate income for tax purposes? I'm waiting. How do we calculate income? Just talk.
Gross income.
Let's listen
Gross
to
income.
Gross income less exempt.
Let's listen to
income.
Telma, sorry. Let's listen to Telma quickly.
Gross income minus exempted income.
That will give us?
Income.
Thank you. That's correct. So indeed, and we also know under gross income, we don't write a heading to say special inclusions, but we know special inclusions is actually gross income. It is included under gross income. So guys, today obviously we will look at exempt income. So you see, we are now done with gross income. Guys, we've done gross income for 5 weeks. Gross income including special inclusions. Today, as you can see my arrow, we are looking at exempt income, and that will give us income. But before we do that, let's define exempt. So exempt, when you are exempted from something, or if somebody or something is exempted from something, they are not affected by it. You do not have to do it, or you do not have to pay it. Yeah? So if you are exempted, guys, let me use this in a very basic example. The 262 students who submitted their test online and who didn't have any problems, they will be exempted from the outcome that I will actually give today. So they are not affected by it, and they don't have to do. If there's something that the people still need to do today, for me, in order for me to basically mark the test or something, then it means they are not exempted from that. But the people who submitted and all of that, they are people who are exempted from something. They are not affected by it, and they don't have to do it. Okay, now like I said, guys, we are back at the framework. Guys, our aim at the end of this semester is to calculate taxable income, and then I've already showed you the tables. You know how to calculate tax. So using this income that can now be taxed using those tables. That is our aim. So obviously we need to go into detail of each of these things. So exempt income, so when you determine gross income, the next step is to determine if any of this gross income that you've included here, the next step is to see, are there any amounts included in gross income that should now be exempted, that should now be deducted, that should now be taken out? And guys, exemptions, in plain, simple English, exemptions is relief that the government actually give taxpayers. Remember when we dealt with the principles, we spoke about as little as possible. So this is the government's way to say that I actually want you to only pay me a little bit of tax, because exemptions will obviously make your taxable income less, which means you will obviously pay less tax at the end of the day. So exempt income is relief that the government actually give us, SARS or receiver of revenue in Namibia. So indeed, so the next step is to determine if any of this income is exempt from tax. Now the exemptions for tax 202 are set out in sections 10, 10A and 10B of the Income Tax Act. Now guys, this you will find in your prescribed textbook. You will see section 10, 10A and 10B. These are the exempt income. Now, exemptions only apply in respect of normal tax. Now, guys, the one mistake that students make in a test for test 2, remember test 2 is not far. The one mistake that students make is they exempt amounts that they've never included in gross income. Now, that is an epic fail. Né? You know those fails where babies fall and all those things. That is you, if you do that. You cannot exempt an amount if you've never included it in gross income. An amount can only be exempted if it was included in gross income. And then when it comes to annuities, we saw you don't even exempt the full amount. You only exempt a portion of the amount that you've included in gross income. That is why we calculated Y. Y equals to A over B times C. You know, to get the capital portion, because only the capital portion. Yes, maybe I'll include 4,000, but only 2,000 will be exempted. So I'm saying again, epic fail if you exempt an amount that you've never included in gross income, because these exemptions is actually amounts that were included in gross income. And guys, that is actually the difference between an exemption and a deduction. Let me explain that to you. A deduction, that is something that you can deduct, but it doesn't necessarily have to be included in gross income. Let me give you an example. Retirement annuities. When you make payments to retirement annuities, remember that's not gross income. You making payments. Listen to what I'm saying. You making payments to your retirement annuity fund. That is not gross income. It's you paying, isn't it? It's expenses, right? It's not income. Now that you would, for instance, not include in gross income, but in terms of section 11F, you actually have a deduction available for that annuities. Now, can one person quickly tell me what is the rationale? Why do you think the government would allow you to deduct an amount that you didn't even include in gross income? What is the rationale? Why do you have a deduction available? Can someone tell me that? Just try. Come on, guys, just try, just try. I'm waiting. Silas?
Quite really didn't get your question said like the last part.
Okay, the question is, why do you think the government would allow you to deduct an amount? I just told you guys, you sometimes have a deduction, but you've never included that amount in gross income. Remember, for exempt income, you should have included at least something in gross income in order for you to exempt. Now, I'm saying with deductions or allowances, sometimes you will have a deduction available, but you've never included anything in terms of, let's say, that annuity that you are paying on a monthly basis. You are not receiving it, you are paying it right now. You haven't retired yet. So I'm saying you have a deduction available, but you've never included something in gross income. What is the rationale? Why do you think the government allowed that deduction? Anyone else can come in, or Silas, talk to us.
Are you talking on a personal perspective or business perspective?
Business or personal? Let's talk about the natural person, but it's even the same for businesses. Maybe not the same type of annuity or things, but they also have that principle where sometimes you don't include it in gross income, but you actually have a deduction available. Anyone?
So can I try?
Let's give to Innocent. Yeah? Let's give to Innocent.
So I'm thinking that maybe sometimes it's not the full amount that's deductible. Maybe sometimes there's a portion of it.
Okay, that's a good attempt. But tell me, why do you think they actually allow it? Because it seems like SARS is then losing money because you didn't even include something. You know, the exemptions is basically a set off from the gross income. But in this case, you didn't include anything in gross income, but you have a deduction available. That seems like SARS is then losing money. Remember, we haven't discussed deductions yet, but I know, and I'm giving you this information now. Let's give to Thelma to assist. Thelma, what do you think? Sila?
I
Oh,
lost what
let's
I.
see. Yes, Telma, talk to us.
I said I lost what I wanted to say, so I can.
Okay, Silas, you wanted to come in?
Yes, so what I think is that just as the other gentleman said, it would depend. Let's say maybe there's requirements that, or if a deduction is just deductible in nature, regardless of the perspective, whether it's business or personal, if it's just deductible in nature, there's no way you can escape it without they deducting, because actually they're benefiting from it. That's what I think.
Who is benefiting?
The tax authority, they cannot just let it, like, just like, for example, in business.
How does your mathematics work? How can the government benefit if you in your thing, if you are deducting something that is never there, it means taxable income is less, huh? So you will pay less tax. How can the government benefit? Huh? Let's listen to the gentleman here. Silas, you are on point. Let's listen to the gentleman here quickly, and then we'll give to this gentleman. So this one here quickly with the red car. Just wait.
I think they do that in order to reduce the amount of income which is subject to tax.
That's a good point. Let's listen to the gentleman here. So please mute yourself. The gentleman here.
Yes, I was thinking that in as much as the government would like to earn money, they don't want to bankrupt people. So by deducting, I think they want to allow individuals to have enough money at least to satisfy themselves.
This is a good one. And why would they want individuals to have enough money? Tell me that. Now you're looking into economics. Remember, tax experts know everything. Yes? Why would they want you to have money?
It is the responsibility.
It's the responsibility.
It is the responsibility.
It's also the responsibility to actually give us all nice services, but it's not happening. Guys, you are overthinking this. Let me give you the answer. Yeah? So, oh, there's a lady here. Quickly talk to us. The lady here. Oh, okay. Let me give you the answer. Guys,
yes, sir. Okay, sir. I was struggling to unmute my mic.
Okay. So talk to us.
Sir, I think it's for the government to be able to reduce the taxable income so that the tax will be as little as possible, and they'll be, as the guy said, they'll have enough money to be able to satisfy themselves, so they are able to buy more products and services, and at the same time they'll be paying VAT.
Ah, okay. So I see. Thank you. That's a good one. I see. I'll give you 2 out of 5 for that one. So you can mute your microphone. That's the last comment I'm taking. Guys, I wanted you to look at annuity. What is annuities? Guys, if you have annuities, then it means one day when you retire, remember the thing is called retirement annuity funds, isn't it? RFA. So that means that when you retire, you will not be a burden to the government for services, and the government doesn't have to pay you that 1,300 that our old people currently get in Namibia and all of that, because you will live off your retirement. So the government basically reward you for taking care of your future. Yeah. Because what you are doing is you are actually putting money away for when you retire. So they say when you get old, remember when you're older, guys, you have more expenses, isn't it? That is why you should always start saving as early as possible for your retirement, because now you need to operations, you need medical care, you need someone to look after you and all this. And so if you have retirement annuities when you retire, then you will be less of a, and I put it in inverted commas, of a burden for the government, financial burden, because you will use your own money. And the reason why you have a deduction available for that is they want to encourage all of us to do that, so that we will be less of a burden one day and things like that. And that is why they've even increased it in Namibia. They've even increased that deduction this year. It used to be 40,000 in a year that you can deduct. Now it's even 150,000 because they encourage people to do that. And guys, the other thing is also when you actually invest your money, retirement, in a retirement annuity fund, you cannot withdraw it before you turn 55 years, and that means that that money is actually reinvested. Government actually somehow make money in the sense that there will be interest, there will be dividends on that, or withholding tax, and your money is circulating in the economy. And so like one person said, you have more money that you can actually spend, your earning capacity is higher, and they can actually now get other types of taxes, which is now also VAT and all of that. And guys, a lot of people don't understand this issue, this thing where you need to circulate money. That is good for your economy. Can one person quickly tell me, especially the gentlemen, maybe also the females, why do you think soccer players like Ronaldo, of course I would go for Ronaldo, why do you think they get their wages weekly? Can one person quickly tell me? Why do you think I'm sure you guys have heard that soccer players and rugby players or sports people, they get their salaries, basically. They call it wages, but they get it weekly. Why do you guys think that? Why is that the case? If we can wrap up. Why? Have you guys thought about that? So nobody's watching soccer, no? You never thought about that, no? So there's only people watching netball. All right, I'll give you the answer. No, those
I have an answer.
Oh, talk to us, please.
No, they put like weekly wages so that they can spend the money to circulate in the economy. So
someone has been listening. Thank you, Mukuvela. Someone has been listening. Thank you. You are correct, no?
Yes, sir.
So guys, that is the biggest flex for developed countries. Remember, developing and develop. Developing, it's us, Namibia. We are always seen as third world poor, what, African countries. Then we have develop. No? They have already developed. Now, guys, the biggest flex for developed countries is that a lot of people, even professionals, my friend is living in Manchester. She's also getting a salary. She's working at PwC weekly. That is so that the money flow. When money flow in an economy, it's good for an economy. If it's invested all the time, or there's a certain business people. There are certain business people in Namibia that never bank money. They just use cash transactions. That is bad because they sit with that cash in hand. It doesn't circulate. Guys, just in conclusion, a few years ago, not so long ago, I heard that Zambia's economy is so bad that there was a time that it was so bad because there was no money that actually flowed in the economy. Guys, in order for the economy to be stimulated and growth, and I'm not an economist, but I understand at least this bit about economy or economics, is that money need to pass from one hand to the next. And that is because people that live in the UK, in England, in these places, every week they are paying their domestic worker. Every week they are paying water and electricity. I'm sure it's tiring. Imagine doing errands every week. And it's not everywhere. It's not everywhere. You can always, some companies do pay by month end. Obviously, it's a preference thing. But in terms of them having that option, in Namibia, all of us, we always wait 31 days. Sometimes it feels like 40 before we get paid. And that is bad for an economy. It's bad because my earning capacity is only when I get my salary. And since it's peanuts, I use it in one day and there's nothing left to spend again, and the government take half of it for taxes and all of this. But anyway, Mukuvela, you wanted to say something before I wrap up?
Yeah, no, I'm just confirming. Like, I also know someone working in PwC UK. Like, was telling me they got their salary like weekly.
Yes. All right, thank you. And that is so that they can spend it. Guys, I know of another friend of mine who moved to Australia, and the first thing she told me is the people that looked after kids, they needed to pay them weekly, and it was such an adjustment, because if you used to monthly and all of this. I know another friend in Luxembourg who hated, she always tell me every week errands, but people that live there, they are used to it, and that is how the money flow, that is how developed countries work. Now, it's not to say that is the only reason. There are many other reasons, but that is one of the reasons. Now, guys, we can end there for today. Just know that exemptions are only applicable in terms of, or in respect of, normal tax. And then lastly, I can just show you that exempt income, or income, will be exempted for two reasons: because it is an exempt or a special type of entity, or it is special income. Now, the type of entities would obviously be, let's look at churches, non-profit organizations, if those are entities. Their income, why is their income exempted? Because it's normally donations and things like this, and government doesn't want to take, it's so difficult to get donations. Imagine they also tax these donations and things. So there are two reasons why income might be exempted. Firstly, because it is an exempt entity, or it is a special type of income that needs to be exempted. What do we mean with special type? Don't get this wrong. It's not special inclusion. Special type of income would be, maintenance. Remember alimony. That is a special type of income, because if someone get $1,000 per month for alimony for kids or maintenance of kids, the government wouldn't want them to pay tax on that $1,000. Even you as a student, if you have a bursary and you get an allowance of $2,000, technically, in terms of the gross income definition, total amount in cash or otherwise received by, total amount, you've received money, you were supposed to pay tax. But the government doesn't want you to pay tax, because they say that's a special type of income. Not everyone, or, it's special. It's a bursary. They don't want you to pay tax on that. But guys, we can end there for today.